Dear investors, Prasenjit Paul here. In the previous video, I have shared how I have earned 10 times return from my initial investment in one of my portfolio stock, and in the process earned multiple crores from the stock market, which helped me in financial freedom. If you didn't watch the video, you should just pause here and watch the video. The link is given above, because that video is not a show-off video. In that video, I have also given the proof that is available in the public domain about my earning of 10 times return, and most importantly, I have shared multiple insights, multiple learning from earning 10 times return from my original investment from a stock that can surely help you to make you a better investor. In this video, I am going to share you my another portfolio holding company, that is Lancer Container, which I had purchased back in 2017, holding till date. The stock didn't generate much return in this last 4 years period, but I am still holding. And not only that, I have also purchased more quantities in December 2020 period. That data is also available in the public domain. Just visit BSE India official website, visit Lancer Container and check the shareholding pattern. You will find from 2017-18, since 2017-18, my name as a shareholder will be visible in the Lancer Container. Not only BSE India website, if you can check websites like Screener, Trendline, or any website that displays the shareholding pattern, you will find my name. So that data is my holding data is available in the public domain. After December 2020 shareholding pattern release, you will find my holding is also increased. So in this video, I'm going to share you the business of Lancer Container, what I liked about the company, why I had invested on it, and most importantly, multiple learnings and multiple insights that will surely help you a lot. Before that, let me tell you that obviously this is not a stock recommendation, not a stock tips, not a research report, because I won't talk about the stock price target of this company. This is all about a knowledge sharing video. I'm telling you what's the risk of if you just blindly blindly copy any microcap stocks. Okay, Prasenjit Paul invested in this microcap Lancer Container, so let's invest blindly. If you do that, I'm telling you what's the danger of it. See, this same stock Lancer Container from at one point of time from the peak of 110, and let me tell you, since 2017 I am holding almost 4 years. In this 4 years, most of the time the stock was in negative zone. The stocks generated negative return in my portfolio in most of this 4 years period. Not only that, at one point of time from the peak of 110, the stock price crashed to 24-25 kind of level in this 2020 March 2020 itself. So a drawdown of around 80%. Now, if you just blindly invest in any microcap stock just because someone else, or just because Prasenjit Paul invested, and if you notice this 80% fall, as Lancer Container previously dropped by 80%, so it might again fall by 40, 50, 60, 70, it can fall, easily fall. So forget about 80. If you blindly invest and then notice the stock dropped by 50%, then what you will do? You will obviously you'll obviously panic. And after panic, mostly you might ask me, sir, what happened? I invested based on your this, based on your that. What happened? Many of you might also blame me. See, that's the risk of investing blindly. Since 2010 to till date, I never, I never forced anyone to invest. We never take investors' money in our account and then invest. Still, sometimes, you know, I get emails like, sir, I based on your this, now I am suffering loss because of you. Obviously, I got many more emails like, sir, just because of you, I built my dream home, my daughter is in IITs, I have purchased my first cat, etc., etc. But see, you have to understand one thing. I am not taking your money in my account. I never did that. So your money remains in your account. If you make profit, obviously you won't give share of your profit to me, right? So your money, it's your profit. If it is loss, it's your loss. I am nowhere. So understand this very carefully. Now you might ask me, then what's the purpose of this video? See, this video will help you to gain knowledge. The content that I'm going to share in this video, you won't find anywhere else at free of cost in the internet. Not only that, the lessons, the insights that I'm going to share you, that can help you a lot to become a better investors. Just don't blindly copy. If you invest, do your research. Just understand that it's your money, your investment, profit will be yours, loss will be yours. So without wasting much of your time, let's understand the business of Lancer Container. So first, what does the company do? The business of Lancer Container. See, you know, the import exports maritime import export. Suppose you are a basmati rice producer, just for example, and you want to ship the basmati rice to Middle East country, say Dubai or in European countries. So obviously you pack the basmati rice and you can't ship through aeroplanes because that will cost you more. So you will ship through ship. Now what you will do, you will just pack the rice and then you will put in a container. I can say it a box. So that's the Lancer container. Container means, simple terms, the company is in the business of container, and container is the box. So as a rice exporter, what you will do, you will pack your rice and put it in box, and then multiple, maybe these 100-200 boxes are then put on the ship, and that ship will travel from India to Middle East, Dubai, or maybe wherever. So Lancer Container owns this container, in simple terms, this box. So they don't own a ship, they just own containers. Back then in 2017 they had only 2,500 containers, and at the end of 2020 they own around 10,000 containers. So in simple terms, that's the business of Lancer Container. Earlier the container was on the major source of income. Till date it's their major source of income. Apart from that, nowadays they also started many auxiliary services like air freight transfer. Like suppose the container, this box transport from one port to another port. After that, after reaching the port, from there for further connecting, they connect to the flight companies and all. They also do container trading. If there is if there is not enough demand for the container, they sometimes sell this container. They also do this empty container work. So lot of auxiliary service, but ultimately thing is the container which is used in maritime import and exports. Now what I liked about the company, why I had invested on it. The first reason is the growth. As you can see that if you look at the last 3 years CAGR sales growth, the company is growing at more than 50%. CAGR growth rate is more than 50%. CAGR profit growth rate is more than 68%. So that's a pretty good number. Now the growth, despite the growth, if I look at the balance sheet, for me obviously these balance sheet parameters, ROE, ROCE, debt to equity ratio, cash flow, this comes first, then growth. So if you look at the ROCE, return on equity, return on capital employed, these parameters, you will find for the last 3 years average is more than 25%, which is a great. If you look at the cash flow from operation is also very good, and this matches with the profit numbers. Then if you look at the shareholding pattern, the promoter holds around 74 point something%, which is near to the maximum permissible limit, and obviously there has been no pledged share at all. Now talking about the growth, see, basically this particular sector, this maritime import export, this container business, this container is not a high growth segment, but as the company, while the company was listed, that company itself was a very small company. So this is why they had a huge room to grow. As I was told that back in 2017, while I had invested, they had only 2,500 containers. So since then they keep purchasing, and as on current date they have 10,000 containers. So that's a huge jump. And not only that, I basically attended all the annual general meetings this year. That was in the video conference, but in previous year I visited the Navy Mumbai from Kolkata. I visited Mumbai to attend the annual general meeting, and I interacted with management. There are many shareholders of there, so I carefully follow the way of, the style of talking of the management and all. So one thing I noticed, the management is growth hungry, and by their words, somehow I feel back in 2017-18 their top line, their sales was around 100 crores, but somehow given their vision, somehow I feel that the company has a good potential to make it a 1,000 crore top line company in the next 3-4 years. So maybe within 2023, 24, or max 25, I can see the vision that the company can grow. Currently back in 2018 that was a 100 crores revenue. So I somehow looked that from that company has potential to grow their top line, their sales number from this 100 crores to 1,000 crores. Now this kind of growth, and as I'm telling, they are purchasing container. Obviously for that they require debt, they require external money. Not only that, once I had visited their AGM maybe in 2018 or 19, I had also noticed they are shifting to a bigger office. So earlier they had a small office, so now they had shifted to a very big office. So the management itself, I roamed with the management, they had told me, okay, these are the rooms. So I can see the vision on them, and that is possible only through the management visit, attending annual general meeting, and all. Now talking about the death, that's a very important part, because this business itself is a capital intensive business. They require death. So if you look at the debt to equity ratio back in 2016, 17, 18, there was high, more than 1. But the good trend is, the trend is on the declining trend. So more than the absolute number that I multiple times mentioned, it is the trend which decides whether the company can do good or bad. So if you look at the trend, the debt is on a declining trend, and currently debt to equity ratio is less than 1. Another important thing, after this COVID-19 pandemic, the company suffered a lot. Many companies, this is obviously the non-essential business, so the company suffered. But that time, if you still in the BSE India website, they still have the press release, the COVID-19 impact and the after result release. If you read carefully, you will find the company is struggling, but at the same time the company is actively trying to reduce its debt. The management multiple times telling that they didn't avail the RBI moratorium that the RBI offered, okay, that you can skip the EMI payment. They didn't avail that. Instead, they are actively trying to repay their debt to reduce the debt. So this small indication, this small things talks a lot about a company. So that's another very positive. Despite the business is not an asset light business, the company is actively trying to remain asset light after the container purchase. So now they are mostly looking for to take these containers on lease, on rental basis. So whenever demand may be high, they might take on rent, and after that they might sell. So that's another very good indication. Now you might obviously wonder, like, how can I check all these important ratios? See, basically in the financial statement of any company there are hundreds of ratios. Now which one to give first priority, which one to give maximum focus or not? So for that I have a detailed course in my website. You can visit my website www.prasenjitpaul.com. you will find there's a fundamental learning course. The course is designed in such a way so that any investor can analyze fundamental strength of any company within just few minutes, maybe within 10-15 minutes, with the help of a pre-formatted Excel sheet. So on that Excel sheet I have sorted down all the important ratios. There are hundreds of ratios, so you need to focus on what are the important ratios that will decide, or you can judge the fundamental strength of any company. So on that single sheet you can get all these things: return on equity, debt to equity, cash flow, shareholding, and all these important things, margin and all. So if you didn't checked out that course, I'll highly recommend you can go through this course, because that will surely help you a lot in your investing journey. Now I'll move to the slides to show you what is the negatives and few more multiple insights and multiple learnings about it. Negatives is very important obviously for any micro cap companies. Without negative you can't expect all the positives for any micro cap companies. So let's move on to the slides for the negatives and for another multiple insights that I'm going to share with you. Let's move on. So talking about the negatives, I'll show you something interesting, that is related party transactions. So again, you will find this document from BSE India announcement, corporate announcement segment. In this document, what you will find, a very interesting point you will find is that the chairman of the company, Abdul Khalik Chataiwala, and his wife and son, and also his daughter, so they themselves, here is the entry, you will find the rent paid for the 6 months period. They had paid themselves a rent worth around 12 lakhs, 7 lakhs, 9.96 lakhs, so around 30 lakhs. And here in the footnotes you will find the rent is paid to Mr. Abdul Khalid Chataiwala and this for taking their bungalow on rent to be used as guest house for the company. In simple term, what it means, that the chairman himself, his wife and his son, they are taking around 30 lakhs in the 6 months period, so maybe 60 lakhs in 1 year period, from the company account to their own account, because they are providing their own bungalow for using as a guest house of the company. So this is basically taking a fund from the company account to the personal account through some indirect route. Many companies do that. And while I asked about this to the chairman in the annual general meeting, so he simply answered that if the guest, the persons those visit for the company and business purpose, if they kept their guests on the hotel, so that might even cost more. So using their bungalow, they might saving costs. So that's not a great, I don't find some strength in their
answer. But yeah, many companies do that. It would have been better if this expense was not there in the Lancer. Apart from that, you'll find his son in the same related party transaction. Okay, Mr. Abdul Khalid Chataiwala, he is the chairman and managing director. He should obviously take some handsome salary. But here you'll find his son and his daughter, maybe all of them are in 20s. They are also taking a few lakhs worth of salary every month. So that's the thing that I didn't like. Many companies do that. Even Mukesh Ambani's son is also good position and takes hefty salary. So anyways, if that is not, if this related party transaction was not there, then that would have been a better. So that's one negative. The second negative is the debt that I had already mentioned, that this business model is not an asset light business model. It's an asset heavy business model. But the good thing is they are actively trying to reduce the debt. And the third is, obviously, if there is global economic slowdown, then that will impact the import and exports. And if it impact the import export, then there might be a weak demand in container. So let's move forward for the key insights that we have learned in this the session. So I have first purchased in Lancer Container back in March 2017 at 30, then had multiple repeat purchase, then at 60 rupees, then again at 80, 90 rupees, and so on. In the meantime, there are multiple short profit booking as well. So the point to note is the buy sell decision should not be solely depend on the stock price movement. I have noticed multiple times what investors do is they purchase maybe at 30 rupees and the stock price doubled at 60. So they might think, okay, the stock price already doubled, I won't buy. So that doesn't matter whether the stock price double or triple. If the business prospect improves, then you should purchase. If it is not, then it is not. I have also prepared another video. You will find the video above in the link. So I have mentioned, if your portfolio stock price falls down, many times I have noticed that if a stock price falls down from 100 to 50, many investors just eager to average it more. They purchase more at 50 rupees in the hope that to reduce their average purchase cost. So check out the video to get another some important insights on those cases. Again, I have invested in Lancer Container in December 2020. Why? See, from March 2017 to December 2020, I am holding for 4 years, almost no return on my average purchase cost. Most of the time, it is on my negative side. Still, why again on December 2020? See, since November and in also December, as I follow daily newspapers, magazine, and all, I got a very interesting development. There are multiple news about the container shortage in India. What has happened is actually, so in the last 6 months, as you know, since after the Prime Minister Narendra Modi pitched about the Atmanirbhar Bharat, so since then the India import is falling, the import is less, and more focus is on export. So as the import is less and exports are getting increased, so what happens? There, the exporters are facing container shortage. So many exporters are quoted, say, for the person earlier for a container for a shipment to move from India to Dubai earlier, whatever the rate is. So in December, in the last 1 year, the rate is jumped by 2 or 3 times. If they want to ship not only in Dubai, be it in Australia, Europe, so the ships, I mean the rates, the container companies or the ship companies, they are quoting much higher rate due to the container shortage. Why this container shortage? See, earlier what has happened, what India imports, suppose India is importing apples, some 1,000 tons of apples from America to uh, India. So all these apples came in a container, and these containers are again used from India to maybe European nations to export rice. Now, what is happening? Now, let's assume if India stops importing those apples, then what is happening? The containers are not coming to India. The containers, those are coming to India, they are less in numbers than the containers, those are required to export, those are required to ship outside India. They are coming to in higher numbers. So, this is why there is a container shortage in the industry, and as a result, the shipment price had moved up. So after following this news, I got an think I just analyzed that, well, if that is the case, then Lancer container might also get benefited, and that benefit that might be noted in this October to December quarter result. Because if all container companies are quote higher price, then Lancer container also might get the benefit from it. So based on this thesis, somehow it may not happen, because apart from this cost increase, many auxiliary cost might also increase. I don't know what will happen, but there is a gut feeling from my analysis. I can see that it might happen. This October to December quarter result might have been better than the previous quarter. Let's see. I don't know what will happen. So one important insight is, see, all these business newspapers and magazine, nowhere the name of Lancer Container was mentioned. So you need to be a successful investor, you need to follow daily newspapers, magazine news, and you need to connect the dots. You don't know what news is essential. I mean, what news can link to which company. You don't know that. Even in the magazine and business, I never found that the Lancer Container is said to benefit. No such news was there. So if those kind of news was there, then the stock price would have been jumped much ago. So those no direct news was there, but from this news I can connect the dots, and somehow I feel that the company might be benefited. So that's the reason for my investment in December 2020, and that's a very important insight, that you need to daily follow business newspaper, magazine, and connect the dots to stay updated, to maximize your investment return. The second insight that is, success rate would be very low in microcap investing. In the previous video, in the Chemcrux, how I made 10 times return and few crores, I have already mentioned it. Because see, if you invest in 10 microcap low volume stocks, you can't expect that all 10 will do good. Maybe 40, even if the 40-50% success ratio out of 10, if 4-5 will do good, that's also enough to bring multifold return. And you need to remember one thing, this in microcap investing, if things go wrong, then it would cause a huge loss. This is why I personally invest in microcaps the amount that I can afford to lose. You got it? I can afford to lose, so that it won't create, even if all my microcap investing goes zero, then also that won't create a very big pressure in my overall finance. This is why I have a 50-50 kind of division, 50% in microcaps and 50% in high volume stocks. And then the next insight is, blind replication of microcap low volume stock investing won't make you wealthy. Because while the price falls, while you invest in microcap stocks, at some point of time the price might fall very sharply, 40-50% kind of drawdown there must be there. And while the price will fall, you will panic. You won't get the conviction because you don't have in-depth understanding of that company, of that particular stock. So this is why you won't take any I mean, any rational decision on that time. Secondly, you may not, or I will say you won't replicate the risk reward due to this low success ratio. See, the replication of high volume stocks, like if these are the high volume stocks, in high volume stocks, what will happen? These stocks won't crash big in a quick time, and even if it drops by 10-20%, you can still have a chance to exit. But with these microcap stocks, if any bad news emerges and the stock price corrects by 40%, even at the 40% loss, you can't exit due to the lower circuit and all. So this is why, this is another takeaway, that blind replication of microcap investing can't make you rich. This video will surely help you to get knowledge about this company, but if you want to invest in this company, you have to build your own conviction, you have to analyze yourself, you have to create your own entry strategy, your own exit strategy, your own risk reward. Because I don't know how much loss you can afford, so you can only know how much loss you can afford and what is your risk reward profile. So that's an insight. In the beginning of the video, I have already mentioned, don't blindly replicate. Just because of Prasenjit Paul purchased a particular stock, don't blindly replicate that stock. Remember, it's your money, it will be your profit, and loss will be yours. So take your responsibility and take this video. I think this video will help you a lot to get the knowledge about a company and to get a lot of insights on the microcap investing while for multi-bagger return. This is in fact the same reason in my website www.prasenjitpaul.com. You will find there is a follow my portfolio section where I simply offer the what I am buying and selling in high volume segment. As you know that my portfolio is divided in two parts, 150% approx in this microcap low volume stocks, and another 50% is in the high volume stocks. So that high volume stocks, I offer this in the follow my portfolio. If you're interested, you can go and check over there, because those high volume stocks, even if they falls, they will give enough exit opportunity. So that's it from my end as of today. Share your comments. If you like the video, make sure to share with your friends in the social media, because they might find the video useful for getting more insightful videos on the coming days. Make sure to click on the subscribe button and then press on the bell icon. Without this subscribe and bell icon, you won't get notifications, or my upcoming videos won't get come in your timeline. So make sure to do that if you like this video. And that's all from my end. Next week I'll come with another insightful video. Till then, happy investing. Have a nice day.